Hey, everybody. Welcome to the morning market briefing. It's Wednesday, July 29th, 2026. Hope you're doing well out there. Make sure you hit the subscribe button if you are on YouTube. If you're not on YouTube, go check it out. Search for the morning market briefing. New high count on subscribers. So excited to see that. But we set a goal of 1 million subscribers by the end of the year, and we got to pick the pace up to get there. So
tell a friend.
Yeah.
Subscribe to your wife. We can tell from the demographics that no one has subscribed to their wife. Not one person. At least not to the YouTube.
Yeah. Yeah.
99.9% male.
Yeah.
So either that or people are really fudging their YouTube profiles.
Yeah. It's hard to tell in this day and age, but yeah, get people on board. It helps us in some way. I don't really know how subscribers help us, but presumably it's not bad.
Helps the ego.
Yeah. Hype the boys up. Hype the boys up. Tom, we got a Fed meeting today. 35% chance of a rate hike. Yeah, I just don't see that coming.
Yeah, I've got it firmly pegged at 0. I would be very surprised. I mean, the only way it could go, I think, is if you see almost a mutiny of those who are either standing against Warsh or are looking to push a narrative. Because I think that Warsh knows that raising interest rates is not going to bring oil prices into a less volatile situation. I mean, that's just the long and short of it. Everything else really is trending the correct way. All of the sticky things that have been plaguing the inflation number for years now have come down, except for, you'd argue housing is still wildly out of range. But that's still coming down. I mean, the numbers have not been good on housing. We hit, 699, 689 on 30-year fixed mortgages this week. So I don't expect them to be getting more expensive anytime soon. And I mean, the interest cost is now the problem of buying houses. It's not even the price, because prices are coming down. I mean, you get nothing but price cuts on your Zillow alerts now. And it's not like there's not a lot of inventory out there. There's plenty of inventory. So you've got a supply and demand issue pushing prices down, but the total cost is still high. But that's not how owners equivalent rent works either. But yeah, I mean, if you think of the tail of the tape of voters, you probably got Beth Hammock, Lori Logan, Kashkari maybe, that are on sort of the probably might push for a hike front. Then you've got Lisa Cook, who just doesn't want to do probably anything that Kevin Warsh wants to do. And so you start to tick up on the numbers. So any combination of those people, they all vote for a hike and overwhelm the voting, it's certainly possible. I mean, there are some people you're not quite sure where they could be on the fence. My guess would be Mickey Bowman is probably going to be in favor of not doing anything or potentially cutting, along with Kevin Warsh. But it's really hard to handicap right now because there's not a lot of information. We are getting lots of talking heads that are kind of coming out of the clouds. Raphael Bostic, who is retired as the
resigned in
February, probably.
Yeah, because he got done in on insider trading.
Yeah, whoops.
But he's one of the principal leaders of.
Yes,
we need more Fed independence led by him.
Yeah, I mean, he's been out for at least 6 months now, 5-6 months now. But he came out of the clouds yesterday and said that, how do we know that the information we were giving in the forward guidance actually wasn't awesome? Basically, was the gist of it, and then he hopes
maybe I was right.
He hopes that the task force will show that perhaps that they had come to the perfect conclusion of what they were doing was exactly right. But nobody cares what he has to say. I certainly don't. I think the woman who's the interim president now is named Cheryl Venables or something like that. So they're in the process of looking to find a new Atlanta Fed president. But until then, no one cares what Raphael Bostic has to say.
You know who I think would do a good job is Ryan Miller.
Ooh, young Ryan.
Very stoic.
Very.
Trained under and studied under one of the more preeminent muni bond traders in Atlanta.
He's a world traveler.
Mm-hmm.
That's true. He does take a lot of vacations.
Where is he this week? Somewhere weird.
Lake Michigan.
Yeah.
Lake Michigan.
He's buying a primary residence, I think, so that he can
a third.
So he can take that job.
He's buying a third,
so that he can take over the Atlanta Fed. I mean, my expectation here is a hawkish hold. I think that Warsh knows that everyone wants him to be hawkish, and that the assumption that they could still potentially hike in September will have a positive effect by having a negative effect on inflation. I mean, we got Procter Gamble, but I don't get into it. They're getting price pressure to the downside, and that's once your staples start to have trouble with not having to cut prices, then that's good for inflation because staples, by nature are the things you have to have. And I think that we're in a position where, honestly, the right move would be cutting. I really believe that.
Well, I mean, Steve Moran brought up a great point yesterday. He was on CNBC. He said, look, if you didn't hike rates last meeting,
Right. Why would you?
Why would you do it now after we had a CPI report that not only surprised to the downside, but was actually negative on a month-over-month basis?
Yeah.
So it doesn't make any sense.
Yeah. If anything, keep the pressure on, which is, in effect, not hiking, because now rates are significantly higher than they were a month ago. I mean, almost comically so in my mind, particularly on the 2, 5, 7 year. The shorter end of the curve has just gotten whacked, sort of the belly. And of course, the front end, the overnight rate, is pegged to where they have it. So it's just it's insane to me.
I mean, I'd love to be a fly on the wall because I imagine Kevin Warsh is extremely smart, and these guys are just going to walk themselves into a pretzel because if they follow the data, they would have to cut. And if they don't, and if they say, no, actually the data is wrong, then they should be on board with Kevin Warsh's task forces.
Yep.
Yeah.
So, there is no out for them, in my opinion. And yet somehow there's this narrative that to be independent, you have to hike rates right now. That is the narrative on Wall Street. And that I think that narrative is fundamentally
And the
flawed.
irony of that is if they hiked rates right now in the interest of Fed independence, Trump would go absolutely ballistic, and that would be a fire starter for a very incendiary debate about Fed independence.
Yeah.
I mean, he would, he would go ballistic, and they would be out, Tim Rose and others would be out with whiny think pieces about how dare he say these things.
Which is more important, independence or effectiveness? If the Fed is following the lead of the person who's trying to turn our economy around by really shaking things up in a major way by reshoring manufacturing and instituting tariffs, why would it not be in the Fed's best interest to move interest rates in a way that helps that and thus the American people? And I think that's the difference between having market participants on the Fed and academics. I mean, everyone on there is an academic. I mean, Jay Powell is a lawyer. These people are all, look at their resumes. They're all Harvard, Yale, Penn. They've never had a real job. They've worked at the Fed their entire career. And that's all they do is sit around and congratulate themselves on being very smart, but they don't participate in the markets. But Kevin Warsh participated in the market. Scott Bessent, who's been the most effective person added to the cabinet in 50 years, is a market participant. That's what you need. And but they're rejecting him because it's like this is a positive force coming in, and they don't like that. What they like is chilling.
Yeah.
They like chilling and being lauded for their academic achievements. But this can get into the entire political realm, but this is why we have a wild socialist uprising in this country, is because these people who are very highly educated are not being compensated for that anymore. It's like, oh, great, you went to grad school and you got a master's degree in ethnomusicology, but you can't afford to live because you can't afford a house and you can't find a job that pays for your hundreds of thousands of dollars in student loans. Well, yeah, no kidding. So does that make you very smart, or does it actually make you very dumb? That's what I think. And that's what's happening here is these people are realizing that they've got a lot of education, but they've got absolutely no know-how. And then a guy who used his education and then applied it to know-how is now coming in over the top, and he's your boss now because he's out there. He went out there and made $100 million for himself in the markets, and you've just been clipping a nice paycheck, and using that to buy vacation homes that you list as your primary home, and that's illegal.
We brought it back to Lisa Cook. I love it.
That's the long and short of it. Think about it. Think about all these people who are like, man, I got all these advanced degrees and stuff that absolutely does not pay.
And I still checked the wrong box on my mortgage paperwork.
Yeah. It's like the system's not working for me and I did everything right. Well, actually you didn't. You took on an enormous amount of debt. in pursuit of something that has no return on invested capital.
Well, this kind of gets into a topic that I wanted to discuss that I didn't include in the notes, but
Let's go.
Mark Zuckerberg wrote a very long op-ed in the Wall Street Journal yesterday, and basically saying we need AI for everyone. Everyone needs to have access to AI. It's actually going to make democracy stronger, not less strong. He says, he made the point that anytime you focus all the knowledge and the power within a group under the guise of benevolent distribution of those tools, it doesn't end well. And I think he makes a good point there. He also said, look, this is going to aid invention and creativity and
it's gasoline for curiosity.
But what he didn't say, and he said this is, and he painted a very optimistic picture of the future. He said, man, everyone could be, he said, they're not going to be working for big businesses. They're going to be working for smaller businesses, more agile. It's going to be exciting. A lot of kind of a cornucopia of growth. And what he didn't say was that, is the American populace
ready for that?
Yeah. Because I am scared that we've, over the last 30 to 40 years, we've focused so much on safety and doing everything right and following the playbook, kind of becoming European in many respects, like doing the right school, studying the right books, joining the right big organizations. And then when we have to think for ourselves, are we going to be able to think anymore? And I think that's a really relevant question that we need to ask ourselves as we go into this AI world.
I was just going to say, there was a headline yesterday that that marijuana has overtaken cigarettes and alcohol in the United States as the drug of choice. And I'm not anti-cannabis in any way. In fact, I think that, everything in moderation, including moderation. But let's be honest, cigarettes and alcohol built the Western world. And I don't think that a bunch of people smoking weed all day
are building anything.
is gonna build anything. And I think that's certainly it's created some unbelievable tunes, and that has economic value. Just ask I was gonna say Katy Perry. Let's ask Taylor Swift. But that's at the end of the day, people who are grinding, people who work hard, blue collar jobs, much higher consumer of booze and cigarettes, I would say.
Well, I think something that might be relevant, Ben, to your point, like, is America ready for this shift that would potentially be enabled by AI and spur up smaller businesses, more action? I mean, take any group. I mean, it could be a church, it can be a school, it can be whatever. My concern right now for society is that if you take 300 people and you say, hey, these 5 guys are the leader, they're the Fed board, they're the school board, they're the whatever, you've probably got 20% of the group of people that is going to be informed and supportive, even if not always so, of that group. And you got 20% that are always going to dislike it. And you got 60% that just are going to say, well, these are what those 5 people said. The Fed said this, 60% of the population is going to say the Fed's right. We become so wired that way that 60% would be the group that I would say, but will they use what's available to them and actually improve their own discernment, improve their own skill set, improve and actually fit in? My concern would be right now, I would argue, and that's an arbitrary number, I've just made it up, but I would argue that the majority will be left behind if behaviors don't change, and not just behaviors, but way of thinking.
Yeah, I'm curious what it means for even our business as well. I mean, it would be very easy for us to come in, index everything, not have any original thought on anyone's portfolios, not have any level of insight or do any work, for better or for worse. It would be very easy for us to do that, and the job would be incredibly boring, but also incredibly,
chill.
Yeah.
And then we'd go into the weed statistics.
And Q2 client portfolios probably would have done better. But in Q3 so far, client portfolios would be down, and they're not. I mean, I think pretty much knock on wood, someone's going to call me out, but client portfolios are up this quarter. We're having a really good rebound from Q2, and if we didn't think for ourselves, we'd be down.
Yep. Yeah, it's interesting to think about. We got a lot of earnings to get to quickly on Iran. Trump says the U.S. Strikes are going to take place after they intercepted some attacks on U.S. targets in Jordan. Says we'll be hitting Iran hard. Oil up 5%. I mean, this is just 3 days on, 3 days off, it seems like. But
yep,
here we are. Ben, walk us through earnings. I don't know if this is something we can throw up on the screen. You got a lot of, or if that's the intention.
I don't think it is.
Never mind, Hicks. You're off. You're off. Don't worry about it.
This was a total disaster for me this morning. I got in early, tried to have AI help me download all this information that came out over the last 12 hours, and it did not help me.
It did not.
Well. In fact, it was probably counterproductive. So then I ended up having to do it all myself, and I tried a different format, and that was a disaster. So anyways, it's a work in progress here. But a few themes that I found. One is stagflation in semiconductors. I want to talk briefly about that. I want to talk about a lot of companies that are actually doing good work. I want to talk about the strong and resilient consumer, and then I also want to talk about the companies that are getting disrupted. But on the semi-stagflation, we haven't talked about this as a theme yet, but this is something that's been emerging here in the second quarter earnings reports, and that is memory prices have gone up a lot. Who is benefiting from that? Micron, SK Hynix for now. But what it's doing is it's destroying demand. So when you don't have printed money, like we did in COVID, when prices go up, demand goes down. That is how that's how the demand curve works. The quantity demanded goes down. And what that means is there's more pressure on selling phones because the bill of materials is up. And there's even more pressure on selling memory chips. Volume is not actually going up all that much. And so pretty much to a company, they're all getting hit pretty hard this morning. KLI 10 core down 8%. Qorvo and Skyworks, which provide mobile chips for smartphones, they're down 5 and 10%. Vertiv, which helps build out data centers, they're down 14%. They had a really bad quarter, actually. They decelerated. This is a company that's supposed to be levered to data center growth. They went from 40% growth to 20% growth in a quarter. And they expect to go back to 30%. They said there's some timing issues, but this is a company that's supposed to be growing in the 40s. So definitely some stagflation. There's a knock-on effect from high memory chip prices. That needs to come down in order to get things rolling again. Otherwise, it's going to destroy demand. But to Tom's point, I mean, that's pressure on pricing. Mm-hmm. And Procter Gamble, like he said, is seeing that. We're not seeing tons and tons of pricing power. I mean, Procter & Gamble is probably the most boring quarter I've ever seen in my life. 0% volume, 0% pricing, 0% organic growth, 0% change in gross margin.
Nothing happened.
So, and by the way, this is the end of the fiscal year. So I was thinking, maybe they can get, 3 to 4% growth over the next 12 months. No, 1 to 3%, which basically guarantees flat pricing, maybe 1% growth. They're getting worked by Unilever. I made some comments about that in our investment team chat this morning, but they're getting absolutely worked. Garmin was up 7%. They had a good quarter. I'm actually surprised it's doing so well. But there's a strong and resilient consumer that Visa talked about. And that continues. They're just being choosy. They don't want to spend extra money on name brand stuff because there's a defined amount of money out there. So the consumer's being choosy, but is spending money. And then there are some companies being disrupted. CoStar. No one's searching for apartments on apartments.com anymore. They're using AI. And so I think that's a theme that we're going to have to look at. But in terms of the companies that are actually doing work, Teradyne is actually in the semiconductor space, but they're up a lot pre-market. And the reason they're up a lot is because every time the semiconductor chip gets shipped, they need to do the testing to make sure that it works and the voltage is all good. And then Vulcan Materials is up, and even Boston Properties is up as well. They raised guidance for occupancy for the year. They're big office REIT, and people are investing back in the United States. And this is a theme that we've been talking about for a while. So you got semi-stagflation on one hand, you got strong consumer on the other hand, you got some people getting disrupted, but there are also just kind of the middle America, almost not boring Procter and Gamble businesses, but businesses that you kind of forget about that are actually doing quite well.
Good stuff. All right, we'll wrap it up there. We'll be back tomorrow. Y'all have a great day. Tomorrow is Tomorrow Day, so get ready.